The Securities and Exchange investigation into the block trading practices of big investment banks now ramping up. Sources telling Fox Business the enforcement agency now scrutinizing U.S. banking giants Morgan Stanley and Goldman Sachs in particular. Charlie Gasparino is here. Okay, they always launch investigations. What's going on now?
This is reaching a stage where they're about to charge. At least that's what I'm hearing from legal sources and my Wall Street contacts. And here's what we know. What is a block trade? A block trade is a huge amounts of stock that a Wall Street firm goes out and sells to other players. When it does that, it usually has to figure out a way to tell people, are you interested in buying? In a way that doesn't suggest that you're getting inside information that you can short the stock. It's not that easy. Trust me on this. The biggest player in this is Morgan Stanley. The second biggest player is Goldman Sachs. There are others that are involved. This is what we understand the Justice Department is looking at, but this is mainly the SEC. I don't think there's a criminal case here. At least I'm hearing this is mainly just the SEC, a civil case. They're looking at whether Morgan Stanley may have tipped off its top clients to these trades, hedge funds, tipping them off and saying essentially, this is coming, and do what you want in your positions. And then these hedge funds would short the stock, because knowing that there's going to be a huge block of stock that would depress the price. We're understanding that this investigation is in the final stages. We understand from these sources that Morgan Stanley is the likely firm to get nailed at least first. What sources are telling us is that they expect Morgan Stanley to reach a civil settlement with the SEC and pay a fine, maybe even have a monitor over its block trading practices. We should point out that Morgan Stanley in the past has put its head of block trading on, I think he's on an administrative leave. I asked if that leave is still going on. A Morgan Stanley spokeswoman did not comment. Goldman Sachs has no comment. I would look at it this way. If you're going to game plan this thing, like who gets nailed the hardest as this thing comes down, it looks like this is mainly focused on Morgan Stanley, just given their role in block trading. Goldman Sachs is a second. There may be other firms, but I hear, if just based on my sources are telling me that they expect Morgan Stanley to pay a fine. How big of a fine, I can't tell you. Usually there's some sort of an agreement to better your practices on block trading. Again, we don't think this is a criminal case. My legal sources who are involved in this thing, and there's a lot of firms that are involved in this, because the SEC investigation at first basically covered every firm. It went on for, I heard, years they've been looking at this stuff. It picked up during the Bill Wong investigation involving Archegos. As you know, Bill Wong today was indicted on securities fraud charges on the Archegos blow-up. Arrested.
He's been released on bail.
Now, how does that have to do with this? Well, he was a major client of major firms. So, that caused them to speed up, essentially, gave impetus to this broader look at block trading abuses and whether inside information is filed or is shared. Now, I just want to say, I don't have the charges in front of me. I can't guarantee Morgan Stanley is going to get charged. All I can guarantee you is my sources who are talking to people at the SEC and the Justice Department believe the following. They don't think there's a criminal case here. They believe there's going to be a civil settlement here. They believe there will be a fine. They believe the person at the top of the list, the firm at the top of the list, is Morgan Stanley, given their breadth and size in the market. Goldman Sachs a distant second.
Morgan Stanley down about 1/3%. Charlie, thank you very much.